this interview, I sit down with Sanga, the trader behind Darwin SQZ. And this interview is a really special one for me because I've met Sanga twice and he's a fantastic person, just a really, really nice individual. What's really special about SQZ and about Sanga's story is how fast he scaled once his Darwin went live. Now, we opened his Darwin to investors in January of 2025 because he was trading through Interactive Brokers on our futures accounts. Within the space of a month, Sanga rose from zero in investor capital to 1.2 million, which is insane. So to hear more about Sanga's story, about the rise of SQZ, and to hear a little bit more about his plans moving forward, make sure you stick around for the whole interview and let us know what your thoughts in the comments section below. So welcome, Sanga, to the Market Masters podcast. How are we doing?
Yeah, thank you. Yeah, I'm fine, thanks.
Good man, good man. So this is a really interesting interview for me because we've actually met in person a couple of times, right? And I remember having this conversation with you when we met, and I said we needed to schedule this interview in because I think your story with Darwinex specifically is really, really interesting. But before we kind of get into your journey with Darwinex and SQZ and the success you've had so far, just talk to me a little bit about yourself and how you got into trading.
So I kind of got into trading during COVID. I always wanted to do some trading, but during COVID, I was home all the time, I guess like everyone else. And because I was working full time, I decided to speak with someone. There was a guy, he runs the Veterans Trading Academy. Mm-hmm. So yeah, I contacted him. I did some courses with him over COVID. And I started trading discretionarily for a little while. So that's how I started as a discretionary trader. Yeah, watching the charts and looking for trends that way.
How long did you do that for? Because for people who aren't aware, you are fully automated, right? You code all of your strategies and you kind of don't have that discretionary approach these days.
Yeah. So I probably did that for about 9 months.
With any success or?
Yeah, there was some success, but it wasn't consistent. Mm-hmm. It wasn't as consistent as I would have liked. So I was looking for something else.
Is that why you eventually made the move to automated trading?
Yeah, that is why. So while I was doing discretionary trading, I found like some of the stuff was just kind of like ambiguous. Like it didn't have enough rules for me. So like one time it would say you have a signal up, and at the same time you have a signal down. And yeah, that was not the type of way, especially when you're under pressure. That was not the type of way that I think was good for me.
Yeah, I think there's a huge difference between the two, right? Because I think with discretionary trading, you get to be a lot more creative in the moment. It's all based on your decision making, your experience, and how you want to express yourself on the charts. Whereas, like you say, with automation, there are certain rules, there's certain parameters. It's very consistent from not just a results perspective or return perspective, but also from an approach and the way it executes. Every trade it takes, it's doing exactly the same thing from last time, and in the next trade it's going to take. It's always super, super consistent. And is that something that you think's helped you actually become a successful trader, is having that routine and that mechanical approach as opposed to having to make the decisions?
I think so, because even when I was trading discretionarily, I always had like loads of rules. Mm-hmm. But it's just that I found like sometimes there would be rules that would overlap, mm-hmm. And I didn't like that. So yeah, I think automated trading was just meant for my type of thinking.
And did you? Because I think we spoke about this when we was in London together. You code your strategies using Python, right?
No. So I code my strategies using PowerLanguage.
Power, not Python, Power. That's
Yeah,
the one. Yeah.
PowerLanguage. Yeah.
Okay. And is that something that you've done in your career thus far, or is that kind of a new venture? Because I know you work for the NHS, don't you?
Yeah. Yeah. So no, from the time I started automated trading, I always used PowerLanguage. Yeah, because it's easier. It's easier to learn. So yeah.
So did you learn on the job? For example, when you started trading or transitioning to automated trading, was that your first experience of coding with Power, or had you done it previously?
No, it was my first experience. Yeah, I didn't
Oh,
do
wow.
any. I just did a bit. I did a bit of SQL before, but not much. Yeah.
Okay. And so how did you get from that point where you decide to make the transition to automated trading? You've got no prior knowledge of coding using Power, and then all of a sudden you build these systems or this portfolio that's doing the return that SQZ is, which we'll get into in a moment. But how do you go from having no knowledge in such a short space of time to being in the position that you're at now?
Well, I had a friend who did he did a course, or like a trading course with, have you heard of Andrea Unga?
Don't think so.
Okay, well, yeah, he did his course, and like he just kind of gave me the videos and stuff. So I just learned from what he gave me, the videos, and it taught me it taught me how to do it. So that's how I learned.
Yeah. And so if we fast forward on, how long's that been since you did that?
What we in 2025, so maybe 22. Yeah, 2022. Yeah.
Okay, so if we're fast forwarding on 3 years, you've got SQZ, which is your Darwin, right? Now that's a year and a half old anyway. So the
Yeah.
record is a year and a half old. So it took you approximately 1.5 years from start, or from when you started doing these courses, to actually building a system that is consistently profitable over a long period of time. Now, I guess my first question on SQZ primarily is it a single strategy, or is it kind of a portfolio of different systems that are running simultaneously?
Yeah, it's a portfolio. So what I do is I trade mostly like breakouts, but each asset is different. It would break out at different times, and it will stop at different times. It'll need a larger stop or smaller stop. So yeah, I would like have to test each asset differently, and then I would create like the strategy for it.
Mhm. And then with that, because there's so many different parameters you've got to optimize for each system, you can kind of run into the issue, especially if they're training the same strategy or with the same code behind the trading logic. How do you manage correlation between systems? Is it purely based on the assets? You might be trading a commodity, an indices, an FX pair. But even if, let's say, I don't know, gold and the Nasdaq, right, are positively correlated. I know that's not usually the case, but how would you manage that from a strategy perspective if your assets are moving in tandem and they're trading the same?
Well, it would depend. If they move the same, then I would just trade them with a smaller percentage each.
Mhm.
So, for instance, if we have two assets that go up and go down at the same time, instead of trading them with 2% of my account, I would trade each one with one.
Okay. And so how often do you have to make those decisions? Like, how often do you sit down, kind of look at the performance from the previous week, month, quarter, year, and go, I need to make a decision now to fine tune this and to change this because of this correlation, or this system's not working as well? Like, what's that process like for you?
So most of last year, I just left it. But uh, what was it? In March, I decided to change it because of all the craziness that was going on in America. I had many indices. So I decided, it's time to change up because things are not moving how they used to. So I got out of so many indices and moved into different assets like commodities and stuff.
Yeah, because it's interesting you say that. I mean, this is just my observation, and I don't usually trade kind of a breakout system. But well, in fact, I do quite the opposite. I am much more of a mean reversion trader.
Yeah.
So, whereas a trader would be looking to trade the breakout, I would be looking for an opportunity to kind of fade that, right? What I've noticed is my system's underperformed massively. These breakouts, they're happening. However, there's a significant amount of chop on the breakout, and therefore it kind of would seem that I would get knocked out. You might get knocked out, even though we're trading completely separate. And
Yeah.
I guess like it's more of a mental note I've taken. But the question off the back of that is, how do you approach it? Obviously, you say you've made some changes. What is it specifically? Is it literally just a change in assets, or do you look at it and go, okay, the market's volatility's picked up, for example, do you widen stops? Is it literally just changing of assets? Like, what is that process?
Well, to change the strategy would be I don't have enough data to change the strategy because the changes have just happened, so you can't just change your strategy, change your stops. So for me, I just put less risk into indices and just add some new assets, add some more commodities, because they're not as volatile right now as the indices. Yeah.
Well, yeah, I mean, it sounds like a lot of your role is less of being a trader and it's more of being that risk manager and managing a portfolio. And kind of what I always say to traders is it's your system's job to generate a return. Your only job as a trader is to actually manage and mitigate the downside. And that sounds like that's exactly what you're doing. Like you built this system, you did it a while back, and now all you're doing is monitoring in the meantime, making sure that through periods like this year, which we can talk about in a moment, because I think it's, again, you're an interesting case to talk about this. It's more of a case of, okay, well, how do we mitigate the downside here? Whilst my system's not at its peak, how do we mitigate the downside? Even if it's allocating less risk to certain setups or, changing one asset to another. But I think the start of this year is quite interesting for you, is because going into it, you were hitting new all-time high on your Darwin after new all-time high. And then I want to talk about the investors with your Darwin in a moment, but you had a bit of a slump when the stuff was kicking off with the tariffs and Donald Trump, but then you've kind of recovered now, right?
Well, this month I made a small profit, but
you've formed that bottom though, haven't you?
Yeah, kind of, yeah. Well, as I said, I was trading a lot of indices, so yeah, I kind of decided just to trade the Nasdaq. Can't trade all of the indices because they're all so volatile, and because my I was losing so much so quickly, because I was trading all of them together. So, yeah.
And they're all positively correlated, right? So
they are, yeah.
If you're losing on one, generally, you're going to be losing on all of them.
And the other thing was, I didn't find that SP 500 and the Dow didn't really trade breakouts well. So I was trading mean reverting with those two, and Nasdaq I was trading breakout, and the mean reverted was doing even worse. So I was like, you know what, I'm done with that for now. I'll just trade the Nasdaq, the breakout on the Nasdaq.
Well, I mean, that aligns with what I was saying. Is I generally only really trade mean reversion trades, and I've had a poor start to this year. Like, there's not been much reverting to any mean of anything.
No, there hasn't been, yeah.
But I think as part of like a combined portfolio as yours, where you've got breakouts, trend following, mean reversion, all these different systems, even if one's having a bad month, another part of the portfolio can kind of prop it up, right? Or it can counteract it.
Yeah, so that's the plan. So that's one of the reasons I was trying to look at other assets to trade instead of indices. So even if I kept Nasdaq and it's not making a profit, I would have some other assets that were profitable, because as an automated trader, you expect losses. I expect to get like a 40% win rate, 38% win rate. So yeah, you have to expect drawdowns. It's not, you can't expect to win all the time.
Yeah, that's an interesting point, because actually the last Market Masters interview I did with a guy called Blaine, who's also an automated trader, since we recorded that, I've actually been dabbling with automated trading.
Yeah.
And it's a huge change for me. Like I much prefer sitting down and kind of building systems, testing them and doing it that way, as opposed to trade manually. I find manual trading or discretionary trading very, very boring. So I quite enjoy it. But exactly what you say, and it's probably the biggest hurdle I've had to overcome, is I will generally prefer to be right more often than I'm wrong, even if I'm sacrificing risk to reward. Whereas using an EA or a robot or automation, you kind of can't really do that too much. I've found. I mean, I'm sure there are systems out there that can, but even with a 20, 30, 40% strike rate, if you optimize it correctly, an EA can hold a position way better than I would ever be able to. So if you've got a 5-to-1 risk to reward on that EA, you can kind of get away with a 40% strike rate, because over time, the EA is not going to fumble the bag and start closing, winning trades early and screwing your expectancy.
But I mean, you also have to know, like for me, I know over the history, like how many trades my algo would lose in a row.
Mm-hmm.
So I would check that. I would check to see like what's the most this algo has lost in a row. So it could be 10, 5, 10. So you have to be able to take those losses. You have to be able to look, okay, this can lose 10 trades in a row.
Yeah.
So because that's how you get drawdowns, isn't it? Your algo has like a lot of losing trades in a row. So you have to be prepared for that.
Do all of your algorithms today all employ stop losses, or do you have some that trade without stops?
No. They all have stop losses. Yeah.
Okay. So what you're saying basically, your rules down is just go on.
I have some that doesn't have like take profit.
Okay.
But they would stop after a certain amount of time, so they're time based. Yeah. So if it's going to stop in a certain amount of time, it doesn't really need a take profit. Yeah.
So you just kind of let it run, knowing that instead of an optimal price, you go, usually these trades pay out within X amount of period, and therefore we'll close it after 3 days or 5 days or a week, for example.
Well, for algos like that, it would be short. It would be like a few hours.
Okay.
Yeah.
Okay. And so let's talk about your journey with investors on Darwinex, because again, I think it's super, super interesting. So for those who haven't seen SQZ before, you trade through interactive brokers, right? So you trade through interactive brokers. Now, initially, those accounts weren't open to third-party capital or weren't open to investors. And I believe it was January of 2025, we finally opened the doors for investors to come and access futures Darwins through interactive brokers. And within 2 weeks, I believe, you hit $1 million in AUM. Is that right?
Yeah, I think it was actually February.
Okay, so a month.
Yeah. It would have been nicer if it was January actually.
I'll double check.
It opened in February, and then I had this massive drawdown in March. So it didn't really work out that way.
You took your first investor on the 15th of January.
Okay, so yeah. So
and then that was on your first day, you had 2 investors, which was 21,000. And then if we fast forward on to the peak, which was in March. So you hit $1 million about a month later, at the end of February. And then in March, the 7th, you hit 1.25 million. So before we talk about the dip in investors, after that, which is due to performance and market volatility, which always happens no matter what investment asset that you're in, talk to me how it feels to have had and managed $1 million like that within the space of a month, to go from zero in investor capital to $1 million. Because I think I asked you this when we were studying that event in London, and I was like, how does it feel to know that that's where you are right now? You can say you've got 7 figures in AUM, and in such a short space of time. What does that do to your mental state as a trader?
You know what? It wasn't because I was doing so well. I was expecting it because I was looking at my results in comparison with other traders. I was looking at trading championships results, and I was like, "Wow, I'm doing really well here. Why haven't I not got investors yet?" So, yeah, I was expecting it, and then when I had the most investors, my drawdown came. Almost half of them left, and I was like, "Oh my gosh!" But in saying that, I think you do have that pressure when you get investors, because when I got that large amount of investors and I had the drawdown, it was like so much pressure in comparison to what I had when I had a drawdown before. Yeah, because now I was thinking, you have so many investors, you don't want to make a loss. Also, I was thinking, I got investors now, I could look at doing this full time, and then I have the drawdown, you lose half your investors, and you're like, oh no, can't leave the job yet.
But that I don't necessarily think, in most cases, you'll probably find that investors will allocate a large amount to a trader. Then typically the trader goes on a drawdown, and especially somebody like you who has a relatively tight drawdown anyway, the investors might leverage up by 2 or 3x. So even if you're down 5%, the investors might be down 10%. Now, if that's happening in the space of a week, it can spook people, and they can go, I shouldn't have done this, I'm going to pull their funds. It's kind of like you've got a bit of a danger zone with anybody. And this is outside of Darwinex anyway. If you invest into the S&P and then the S&P tanked 10% in the first week of holding it, you'd be going, oh, well, that was a really bad decision. What do I do? What's my...
Yeah.
I just think what happened with you specifically, I mean, let's face it, you're still managing $777,000, I think it is, as of this moment. So you've still got a good part of AUM on top of Darwinia capital. But I think what's really gutting for you is that when your drawdown happened, it was when the market kind of blew up around tariff news. So not only did you have your drawdown, you also had investors being scared of just volatility, period. So not only would investors might pull funds because they've lost, they've got a bit of unrealized loss, but also investors were kind of running from any investment during that period. And it looks like it's stabilized a little bit now, but I don't think you should be too harsh on yourself when it comes to that drawdown, because I would say even if you hadn't have gone through much of a drawdown, you'd probably seen a dip in investors at that point anyway.
It's understandable. Yeah.
I do think though, as you recover, and we see this with, or at least I've seen it with a lot of Darwins that I've looked at, you tend to get two peaks in investor capital, and the second peak is usually where they stick. So you get the first peak, and then whenever you have a drawdown, it kind of drops off a little bit. When you recover from that drawdown and you come out the other side and you start hitting new all-time highs again, you see the investors come, but they actually stick around because you've proven yourself that through the good times and the bad, you're still there, you're still trading, you're still sticking to your rules, you're still doing the same things, and they have a little bit more confidence. So I'm pretty confident in the fact that when you have your next run, which will potentially be when you break 60, 70% return and your Darwin hits 160, 170 in quote, I reckon you'll probably see another influx of investor capital. But the great thing there is they'll stick even more because you've proven yourself through the turbulent period. Right?
Yeah. Well, I was thinking that as well. I was thinking, oh, this is like kind of my my first, well, actually, it's my second, like long drawdown, like a month. I don't really have much of them. I had one last year, and no, so I was like, yeah, they're just. I mean, I don't have like 2 years on Darwinex yet. I know, like a lot of people look to join in after they see 2 years of trading record. So yeah, it's kind of expected. Yeah.
Yeah, and I mean, like I say, it was a pretty momentous rally when it comes to attracting capital anyway. I've never seen a Darwin pick up so much AUM in such a short space of time. I remember checking every single day and being like, oh, there's another 50 grand. Oh, there's another 100 grand. Oh my God, we've almost hit 1 million. And I remember I was messaging Ignacio about it as well. And I was like, have you seen SQZ? Look at the capital. He's just absolutely ramping it. But at least you found a base on both your return, and you found a base in your investors. And now it's just back to business. And the great thing is that you have the vision of leading work, but you don't need to. There's no rush. Right? Like, you can continue to do this. It's all automated. You haven't got to go out and network with investors because you've got Darwinex Investor Marketplace there for you. So it is literally just for you time.
Yeah, exactly. It's just, yeah, of course. It's just time and patience. Patience. That's the hard part. You have to have that patience. Yeah.
But I think right now you've got proof of concept, right? So you've seen what it's like. You know how it feels to see $1 million. You know how it feels to have that kind of buzz of, oh my God, this is real. I've got $1 million of investors or investor capital. And so and you're better prepared for next time when it happens, that like it won't be such a shock. And it just becomes normality. And then it's literally a case of scaling from there. But if we rewind back to when you first started with Darwinex, what made you choose Darwinex? Like, what stood out about us as a company and made you think, I'm going to build my track record there?
Well, is there anywhere else to build a track record? Is there anywhere else? I don't think there is anywhere else.
In terms of the way that Darwinex do it, no. I mean, you can, as long as you've got a broker statement, you can kind of classify that as a track record. There's problems with that. You've got to be with a regulated broker. Otherwise, there's always question marks. And nobody has the marketplace that we have, or nobody does the risk adjusting of your track record. So to answer your question, there's kind of a yes or no.
There isn't really anyone else. And also, it was like, for me, it was like a no-brainer because I could trade live and I could also get paid for my trading. So there wasn't anything else I could do that would be more profitable than going with Darwinex. Also, I spoke to you about prop firms before. I have tried like a few prop firms, and the rules are ridiculous. To be honest, the rules are ridiculous. If you make money with a prop firm, you aren't going to do it for long. At some point, you're gonna lose. You're gonna hit their drawdown, and that'll be it. And you won't even have a track record left to show to anyone. So, yeah, I don't think that's an option. That wasn't an option for me. I mean, it might be for some other people, but for me, I don't think that they're on your side. They're not. They're looking to make money for themselves. They're not really interested in if you're profitable or not. But that's my opinion.
Well, I mean, I agree with you. I think that their business model is extremely predatory. And people always ask me what separates Darwinex, what makes us different, right? Because we are providing funding to traders. We are bringing investors. And there's two main things. We actually bring real capital. We invest our own capital into traders, and we, bring third-party investors to you as well through the investor marketplace. But also, all of our interests are aligned with our traders. So I'm not sure if you know this, but we don't run a B-book model. So we don't hedge against any of our traders, or I guess you wouldn't even call it hedge against. We don't take the other side of our traders' positions. So every trader that we bring on, we want them to be the best trader that they can possibly be, because whatever you take, we take, right?
Yeah.
And that kind of separates us from these guys, because a lot of prop firms, they don't even have a B book. They're just providing you with a demo server, hoping that you fail, paying you out with challenge fees from other people, and there's no real trading actually going on. If you
Yeah.
go through to us, any AUM actually goes through an A book, because, like I say, we don't have a D book. So our interests are 100% aligned with our traders, and we want you to be as successful as you can be. And so, did you have to, when you come to Darwinex, I'm presuming you didn't have an idea that in a year and a half you'd have $777,000 in AUM. But how did you prepare your systems for that? Like, or did you just do it subconsciously and not even think about it?
What do you mean? Prepare my systems? What for specifically for?
So every strategy has an alpha cap, as in how much investor capital you could manage or how much capital it could manage. Now, yours is quite high, I believe, off the top of my head. I think you're sat about 10%, maybe just under 10%. So we're talking between 7 to 10 million, if I'm not mistaken. That's not easy to do. A lot of strategies have far, far less. So I guess the question I'm asking is, how do you optimize it like to be investor ready without even realizing that you're optimizing it to be investor ready? The performance is great. The drawdown is low, at least on the Darwin level. I'm not too sure about your Signal account, but also to be able to scale and take on investor capital, or is it all just a byproduct of, I'm just going to build the best strategy that I can possibly build?
No, I think it's a bit of both, really, because I can't build more strategies, but I know, for instance, that short-term strategies can have less of a less investors before they max out, because the profit margins are smaller, the average trade is smaller. So, and I prefer larger average profits as well, because when you have to take into consideration slippage and all of that stuff, slippage can, if you trade in a small amount, for a short amount of time, slippage can take all your profits. So when you back test in, how should I put it? When you back testing, you don't really account for slippage. So if you have a small average trade, slippage can take the whole profit. So it's better to have a large average trade. And in order to have like a large average trade, you have to hold trades for longer, which means you can have more investors.
Yeah, because it's easier to get in and out of the market. Whereas if you're trying to clip a large amount of capital on these short term, maybe a trade that's lasting for a few minutes, it's relatively difficult to get filled that whole price, the more capital that you have, and therefore
exactly,
lower max investment. But what's kind of the next steps for you as a trader and the next steps for SQZ? Like, I know you've mentioned that the desire to leave work and potentially trade full time, but where do you want to take this long term?
Well, there's a lot more I could do, actually, because, as you know, I trade my own funds.
Mm-hmm.
So because I only started with a small amount of money, there was only a few assets I could trade. I could only trade micros. So as my account grows, there's much more assets I can trade. I can trade oil, I can trade RBOB, could trade Forex. So there's a lot more I could do.
So would you, if you look to trade in new assets, would you put them into a new portfolio, or would you add them to SQZ?
I've always been thinking about that. I'm not sure yet. But most likely I would add them to SQZ, yeah.
Oh, really?
Yeah. Because then if I have to put them into another portfolio, I'd have to take money out of SQZ to create another portfolio, which would then have less money. So it would be even tougher.
Or you could just start one through Darwinex Zero, and therefore you wouldn't have to touch the money that you have in Darwinex, and you.
Yeah, I mean, I would love to do that, but obviously Darwinex Zero doesn't allow multi-chats, so I wouldn't be able to use PowerLanguage and all of that kind of stuff. Otherwise, I would have done it ages ago.
Yeah, I mean, it's an interesting prospect either way, but like SQZ, in my opinion, SQZ is working, and I would like to see you with a few different Darwins that are all kind of uncorrelated with each other. And then my dream for Darwinex is that you could, and I don't know whether this is happening, this is just me, I was actually thinking about it on the train and in the way to Birmingham earlier, is like, let's say you had 3 Darwins, you had SQZ, you had QZS and SZQ, for example. Yeah. And then you could have a master Darwin that an investor could buy into, and that would go through all 3. Like, I feel like that would be really cool. But yeah, that's just one of my.
It's possible. It's possible, but it's just I need to use PowerLanguage to create my algorithms. So that's the only issue. Otherwise, I would have done that already.
And do you want to be a full-time trader, or do you like the business side of things as well, where you could potentially launch your own fund and then work with Darwinex to grow that and bring your own investors in? Or are you just happy to, say, I want to be a trader for the next 10, 15, 20 years?
I mean, I prefer trading. I love trading. Yeah, I love building the trading bots, building the algorithms. I love back testing. Yeah. I prefer trading than to have to look for
to do all the admin.
Yeah, I'm looking for investors and all that stuff. Yeah, I prefer to just trade. That's why I love Darwinex. Yeah, it's a big help for me
because it covers everything else, right? You literally just come in and you just trade as best as you can.
Yeah, exactly.
So how many strategies would you say on average you produce every month? Like, do you still now get a concept idea, run it through initial testing, code it properly, go through live test it? Like, do you still do that, or have you taken a period of time where you're kind of focusing on only optimizing the strategies that are running in SQZ?
Oh well, with my drawdown in March, I was building loads of strategies. Oh, what other assets can I trade? I'll build this, build that. Yeah, it takes me about to build a strategy, maybe a few days. It depending on the asset. Some assets trend better than others. Some both counter trend more. And if it's tough to build a strategy, then it's not worth it, really.
If it's simplicity, then.
Yeah. If it's too tough, it'll be over optimized, and then probably wouldn't make any profits anyway.
Of course, yeah. Because for those who are unaware, over optimizing or overfitting a strategy is where you make it too optimized for a specific time period, right? So outside of that time period, it might not perform at all, but you've just optimized it with the data that you have in such a small piece of or period of time. Is that correct?
That's correct. So if you look at it like this, right? If you have to optimize a strategy, say you're building a trend algorithm. If you have to optimize it so much, if it's so tough to optimize it, it means that the asset doesn't really trend that much, isn't it? So then it's not worth it. Maybe try counter trend, or maybe try a short-term strategy like a buyer strategy. Yeah.
So that's an interesting question. How do you draw the line between optimizing a strategy and not over optimizing it? Like, where do you draw that line?
For me, if it's too tough, if it's hard to get a trend strategy to work, then I won't I won't bother. If so, what I would say is if I start the strategy and it makes a profit without any different inputs, any optimization, it makes a profit. It might have large losses and a lot of losses, but over, say, 10 years, it makes a profit. Then I think it's a good trending asset. And then I would look at making a strategy for it.
And then optimizing it without going to,
Yeah.
Whereas, like you say, you tested it over 10 years and it was down over the 10 years, you wouldn't try and optimize it to turn it round. You just go, right, clearly that edge isn't applicable to this asset on that time frame. So we'll try something else, or we'll put this system somewhere where it does work well. And then you optimize it. You move on to the second layer where it's, okay, how do we fine tune this? What are the best settings over an extended period of time, not just over the past 12 months, for example?
Yeah, exactly. Yeah.
Okay. And then it's an interesting one because you went from discretionary trading to algorithmic trading. And the reason it's interesting is because the last interview I did with Blaine, he had a very similar journey and he did the same thing. And I asked him this same question. And if somebody was looking to move from a discretionary approach into algorithmic trading, what would your best piece of advice be for those traders?
I mean, what, in terms of learning to code, or
learning, transitioning, just getting stuck in? How let's say me, I have zero coding experience. I've got experience trading from a discretionary perspective. How would I even start looking to get into algorithmic trading?
Well, that's a tough one. For me, it was just the course that I did, the Andrea Unger course that kind of taught me most of what I know. So I can't really give any other advice in terms of learning to code, and but you have to have like a little bit of experience. You need to understand a little bit of the code as
like
well.
logic and stuff.
Yeah. You need to understand the logic.
That in itself is a great answer. Go and learn how to do it, right?
You'd have to.
Of course, read a book, watch some videos. I mean, there's different layers to that, I suppose, but just kind of getting stuck in there, right? And then another question is, if you could go back and speak to yourself when you was a discretionary trader, what is the one thing or the one piece of advice you would give to yourself?
You know, I wouldn't give myself any extra advice. I think
He's got it nailed.
yeah, I think it's part of the journey. I'm happy that I started as a discretionary trader, because sometimes I can look back and I can see in my what's going on. Like, so for instance, I could see if my stop's too small, or if my profit's too large, and I think that is probably because I started as a discretionary trader, because I can watch the charts and have a better idea of what's going on.
It's got
rather than just looking at the back tests.
Rather than it all just being numbers and data, you actually understand kind of the behind the scenes of what it's trading is.
Yeah, exactly. And even just to explain what your strategy is doing, you need a bit of a discretionary background.
Yeah.
For that, yeah.
Or at least you need to understand how the market moves, why it moves, because I think you can get kind of lost in numbers.
Yeah.
And just back tests and pressing the button to run the code and stuff. Whereas at least if you understand the market, well, it's the best of both worlds, right? You understand it, but you've also figured out a way to get the numbers and the data to work for you, because SQZ is a phenomenal Darwin. But Sanga, we are going to wrap it up here. I know you've got another meeting that you need to get to, so I won't take up too much more of your time. But I just want to say a massive, massive thank you for coming on with me today. I know we've been trying to get it locked in for a while. And I would love to meet up again and have another chat when I'm next in London, so we can get that booked in as well. But yeah, once again, dude, thank you very much for coming on and sharing your time with us at Market Masters.
Yeah, thanks for having me.
Thank you very much, dude.
All right. See you later.
All right.